Happy Friday, traders. It's 8:03 a.m. Chicago time on Friday, the 10th of January, 2020. Thanks for joining me yet again here today on non-farm payroll day. You probably already know that the non-farm payroll and unemployment number came out about a half hour ago. Came in at 145,000, which was weaker than the 165,000 expected. The unemployment rate remained at 3.5% versus a forecast of potentially 3.6%. That's where we stand. We do have wholesale inventories from the U.S. at 10 o'clock today, 10 o'clock Eastern. The number there is expected to be 0%. Overnight, there were several numbers, nothing really big. We didn't see anything dramatic, but the overall sentiment so far is higher. I want to remind you that derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market sentiment this morning is risk on again. The leader of the pack is the Nasdaq. It's not higher by that much. We're not seeing 1% or better moves on any commodity up or down. But the Nasdaq's up 29 points or 0.32%. The DAX follows. The DAX has been pretty strong, up 37 points in the DAX, trading at 13,523, up 0.29%. Remember, the DAX represents the German economy, which is the largest in Europe. The S&P is up 6.25 points from settlement, 0.19%, and crude is the weakest that I'm watching. Crude's down 43 cents at 59.13. Imagine just 2 days ago or whenever it was, it was at 65.65. Huge move this week. Crude is down 0.74%. Gold is at 1550 and a half, down $3.80 or 0.24%. So that's where we stand. Risk on again, as I already said. So we went over what was expected. Let's take a look at. We went over what was scheduled in the sentiment. Let's go over what was expected yesterday. As I'm talking, do me a favor and do this thing. We do this thing about once a month, usually on non-farm payroll day. If you would take a moment, and if you're on YouTube or on the convergenttrading.com website looking at this video, you should have a chat box called live chat. Just type in your location. We don't need to know more than that. Where are you? What city, state, or province? And what country are you in? The reason I like to do this once a month is it creates an interaction within the group, and it helps everybody kind of look around and see if there's anybody close by. Now, I cannot connect you. We can offer you the service of connecting you, which is what Convergent's all about, what I'm all about. But you can tweet at me and say, hey, there was a guy named such and such or a lady named such and such that is in the same city. Can you hook us up? And I'll try to do that. I don't get any information about you from YouTube, but I'm sure that I can figure out a way to connect you guys. So look around, see who's close, get together. Traders are kind of an isolated bunch, and the goal, again, with Convergent, everything that I do is to bring everybody together. Really important not to be alone in this business. Trading is a tough craft. It's good to have people around you. So anyway, I'll get off my soapbox now and move into the review segment, but please do take the time to type it in. Here's what was expected yesterday. Yesterday, because of the big rally we had on Wednesday, yesterday was expected to be a rest day. So the expectation is we would likely push that overnight point of control and then come off and come back into the range and basically trade sideways in a balanced way. That's scenario one. Very, very high probability, or not very, very high, but relatively high probability that we would get this sort of action. Barring that, we would get this more pumping of money into risk assets and a rally. Here's what we actually got. Pretty much what was expected, except that we did not close down. The market was relatively stronger still, even though it's imbalanced. Yesterday was a neutral day. We broke the IB high, then we broke the IB low, giving us a neutral day, and then we broke the IB high again. Pretty strong finish on the day. Technically, yesterday was a neutral extreme up day. Neutral extreme up day, and so to close near highs on a neutral down. And the other anomaly about yesterday is normally we break one IB, let's say in this case the IB high, then we break the IB low, and in general we finish somewhere in the middle more often than not. And but in general, also we only break each side once. Yesterday broke the high twice, and what that creates, in my opinion, is a very clear rejection of lower prices and very clear rejection of prior acceptance, which is right in here. This is the area that the market accepted prices, and it's just not able to do that. Yesterday, once it pushed to mid, consolidated, and squeezed through, there was no reason to get short anymore. It is long, 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 and strong. And so this morning, we have a market that has already pushed to 32.87, giving us about 100 points, a 100-point move in 2 days, 3 days. That's quite a bit in the S&Ps. Very unusual range. Of course, that happened overnight. That happened overnight. But what we did is we closed neutral extreme up. So, the expectation is it's likely to walk itself higher. The next area I had up was 78. Remember, yesterday I talked about 74.50 being a measured move high, an area of congestion. Here it is right there. We kind of shut off the buying a couple times, and then it just squeezed through, and now we're above the 32.78. The area between 32.78, where we are now, and the next measured move higher is free and clear. There's just nothing out here between 88 and 78. I don't have anything out here. This is new all-time high territory. There's nothing for us to work off of to the left, no history. And so it's all about picking your spots and using order flow at this point once a bias has been established. So there's nothing for me to lean against to define risk clearly. So this is we continue to be in this all-time high territory. Just a massive rally over the years, pretty much a bubble, but who knows? So that's what we did. Now we walk that over into the overnight session. We see that we closed at 75.75 and we reopened at that price, and we have done nothing but walk away from it. Overnight inventory is 100% long. However, the volume was okay. It was pretty much on the nose, the same as it was from the prior session. From the prior session on a completely balanced and high kurtosis profile. This profile has a very tight value area. Look at this value area, quite constrained, right? This is a coiling kind of overnight session. Given that it's a Friday, given that the Iran problem came and went within a weekend, which was very, very odd. They're still investigating who shot down this airplane. There's supposedly evidence that the airplane, the commercial airliner that exploded on the way to Ukraine had been shot down by a missile. They're still looking for that. That may aggravate the situation, but who knows? You know, as traders, we kind of have to be aware of everything that's going on in a way. Unless unless we want to stick our heads into price only, which also works. But if you look at this value area, very clear that this is a coil here. And when we have such a tight coil, we're likely to break. We're likely to break away from here pretty strong. The more people are going to be wrong as we break out of here. I want to share this with you. This is my composite profile, composite chart showing the action over time. I'm actually going to, well, let's hide everything. So I'm actually going to just show you just the bar chart. Look at that thing. It is rip-roaring up. I mean, buyers are just getting paid, but swing buyers are getting paid. The pullbacks are pretty few and far between, pretty violent when they do happen. But overall, the market is in a very steady channel up. And you can see that the delta is with it. The delta right down here, there's good lifting all the way through here. Let me bring everything back and then clean this up. You can see the profile. You can see the profile here that the most accepted prices are down in the 2700s, and we keep building value as we move up. We keep building value. It's not thin. This is an election year. There's a lot that could go on. You know, we could be at 4,000 here at some point in the year, but I think that's a low probability play. I was just discussing that with someone last night. So that's where we stand. That's where we stand. I'm not going to show you the order flow today. Something's up with that chart, but what I'll do is go into what's expected for today since it's 8:15 already my time. Please take a moment to hit the like button. It is like Friday. Take a moment to just cast your vote. Give us a thumbs up. I'd appreciate it. Let's get into what's expected for today on another gap situation. Um, Today is a little bit special. Gap rules apply here. Uh, the 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 gap we're experiencing today is obviously different than the gap we're experiencing yesterday because yesterday was a day after trend. That's the context. Um, and then today we have to look at yesterday's action, and that is a pretty um, consolidated day. The expectation is for an open auction that does not fill the gap. The gap zone is expected to remain open. I'm expecting the market to push, consolidate for a while, and then walk and squeeze its way higher. There's not much here, to be honest with you, to constrain the price action from pushing through, and we can easily attain the 32.88, 32.91 from here. That would be 10 points of range, plenty of room for that. The secondary, that is the most obvious play from here. The secondary is an open auction that squeezes up, pushes down, moves towards the prior range, and then just consolidates into a Friday trade, assuming that there is no news. It is non-farm payrolls Friday, so we'll see a flutter on the open most likely, and then the market's likely to just go sideways, and folks tend to just not do very much today, and especially Monday. Monday is expected to be relatively quiet. I'll leave you with that. Again, it's a gap, so open test drive, open test up, drive down, open test down, drive up are in play, open drives are in play. All of that stuff is in play. Okay. Good luck today. Keep it tight. Make sure you watch your risk, and I'll talk to you on Monday. Take care.